Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, January 2nd, 2024. Happy New Year to everyone. Hope you guys had great holidays and off to a great start on this new year. Let's get you guys caught up with our end of month or beginning of month report that we put out at the end of December for January. Titles, divergences. Almost every index has a different wave count. A lot of divergences going on in the markets. Okay, here's our S&P cash, a weekly bar. I don't think it has still yet eclipsed the all-time high back in January of 22. As you can see, we've got a W up, X down, Y up. I can explain that in more detail with the next chart. This is the weekly chart. Okay, there's the WXY pattern there. Okay, there's the targets for wave Y in the WXY, and we had that high of 47.93 on the 28th of December. Here's a more detailed look at that on a daily chart. Okay, and there's the W, which is a flat, X, which is any 3, and Y, which is 5, which is an ending diagonal triangle, with the high so far at 47.93 on the 28th of December. You can see all the open gaps down here, all the direct hits there, and the move up, which we'll show you on the actual charts from this low and that last trigger we had. By the way, we got rid of the positions for rating services since there are no rating services anymore, and we went to triggers and targets, which our subscribers enjoy a lot better and are doing really well with that. Okay, again, we look for a turn to the downside, which we look at the monthly chart, but we haven't seen one yet, and until we do, the trend is up, and that trigger so far has produced 650 plus point gain. Okay, let's get on with the NASDAQ. Again, that's a different count. I've got the bullish count in blue. You can see here we have wave 5 targets for that bull count. You can see where it went to so far. Again, it's below its 2021 high, and the NASDAQ futures and or the Qs made new highs. So again, divergences. If it is not powered by the Magnificent 7, which the NASDAQ composite is not, then it doesn't get those huge moves up. That won't last forever, by the way. Okay, so that can be counted as a B wave up or the 5th wave. The targets are the same no matter what the count is, if you look at the blue or the black. Okay, that's what we're looking at there. There's the reference to the Magnificent 7 and the divergences it has created. Here's our Dow count daily bar. It has moved up to new highs since the January 2022 high. You can see the alternate count in blue there, and there's the wave 3 alternate count and the B wave targets from a 1 all the way up to the 1.618. If this is a B wave high, it should probably stay within the 1.272 to 1.414 range. If it's a wave 3, then it might hit the 1.618 target right there. Okay, that's the Dow count daily bar. All right, the bond market. We love the bond market. Okay, and we have updates from here from the 30th of December. This is the 10-year yield daily chart. There was wave 1 up from the year 2020 low. There's wave 2 down. You can see within 2 we've got a 1 in parentheses up, a 2 down, 3 in parentheses up, 4 down, and a 5 up. We had a trigger way back here which gave us that wave 1 target, which hit right on it. We had a trigger here for wave 3, which gave us this wave 5 in parentheses target. Came really close to a direct hit there. Then we've got this A down, B up, C down. If this is the low here, our next trigger is the wave A low. Okay, here's our wave 2 targets. Well, here's the wave 1 high first. Okay, that 5 waves made a larger wave 1 with a circle around it. Here's an A, B, C for wave 2. There's the wave 2 targets. It hit between the 618 and the 786, as you can see, and it hit just below where C equals A. That's a nice stopping point for it if it decides to stop there. We'll look at that when we get into the charts. Okay, here's all the verbiage here. and we'll quickly move to gold. Gold we've been all over for years and years and years, but we had that upside trigger. The target, it came within 0.21 points or 21/100ths of a point of a direct hit. So that now becomes our downside trigger, and there's our downside targets for wave 2. This whole move up from the December 2015 low is a 1 up in parentheses, a 2 down in parentheses, a 3 up in parentheses, A, B, C for 4 down in parentheses, and then 5 up for 1 with a circle. So we've been in 2 down since that high. Since that direct hit, we moved to a short position against this high, meaning any move above 21.4679, we will resume a long position. But until then, we're going to be short against that high with these retraced targets in gold. And you can see there was the hit within 21/100ths of a point. Okay, that becomes the new trigger. These become the new targets here. These targets should be these targets here. Okay, 382 to the 786. And then there's our position. We're going to be short against that high, okay, and resume a long position when any move above that high. Okay, there's the existing E-mini futures triggers and targets. Okay, so far the last trigger is the 41.85, which has resulted in a 650 point gain. There's the Dow, there's the NASDAQ. Here's gold. Here's the current one since that hit on December 4th at 21.47 within 21/100ths of a point. There are those downside targets we showed before. Here's our past triggers and targets. Okay, that was a direct hit on the way up. This was a near direct hit on the way down. Okay, and it achieved our long-standing target of 40. Should be 21.47. I believe that's a typo. Yeah. Whoops. Let me save that. My apologies, guys. Little typo there. We caught it. There's our downside targets. There's our bonds. We've had so many triggers and targets here, but this is a future one. I'll get into that right after this. We'll go right to the bond chart, but we've got the A wave low for a move up. There's our current one, which we're really close to a direct hit, which we showed you in that other chart. Here's our past ones. There's a target and an actual right there, another target and actual, and there's our current analysis. Let me get into that. Let me pull this up here. We'll get into that bond chart. By the way, it is Tuesday morning, just around 11 a.m. Eastern Time. Here's that US10-year. Here's a wave 1 up, the wave 2 down. We're looking at a daily chart. Wave 1 with a circle of 3. Wave 2 with a circle of 3. And you can see how the market has moved up off of that low on the 27th of December. And there's where it hit the between the 618 and the 786. Let me move this down just a bit. There we go. Let me get that 786 a little further. Excuse me. There we go. You can see that's right in between there, and there's where C equals A. Here's what I was talking about. This, excuse me, A down, which is 4.363%, B up, and C down. So the next trigger will be that wave A low right there. Okay, and that's probably why those are off, because I didn't squeeze in the upper part there. There we go. That makes more sense. So move that back. Okay, so the next trigger will be the A wave low. A move above that will give us a target of 5.551%. That's where 3 equals 1. Again, that's 1 with a circle up, 2 with a circle down. That's the 3 target from this low, which is that 3.783 right there in red, which was on the 27th. Okay, that'll be the trigger. That'll be the target. On the bigger picture, wave 1 up over here in 2022, October of 22, wave 2 down. That wave 3 equals 1 at 7.255%. That has been long standing since the April low. Okay, so that'll be the trigger for that larger degree right here, this wave 1 high. Once it passes there, there's our target for that larger degree, wave 3. So we've got a couple upside triggers here that need to be activated. This low should stay. Obviously, this low should not go below the beginning of this move up, which is 3.253. That's the make or break. Where are we wrong? If it goes below 3.253. Otherwise, there's our triggers, there's our targets. Again, they replace the positions for rating services, which no longer exist. Okay, here is that SPX, S&P cash. You can see it hasn't made a new high above the January 2022 high. There's that WXY pattern there. I think, do I want to, yeah, we can show all this here. Here's that WXY, flat NE3, and 5 waves for Y, ending diagonal triangle. Let me make that better legible there. Okay, we'll get that in there. There's that actual high on the 28th, which is right there at 47.93. And then here's all these open gaps. By the way, it just created a gap today on the daily on the downside, which should be the breakaway gap if the trend has reversed. We'll get into that a little bit later, okay? But you can see the direct hits there. But here's all the open gaps that should be closed. If this is B high, C will go below wave A or near the low of wave A and close all of these gaps. These are the targets for Y. We've got a W, X, and here's the Y. You can see that's the 1, that's the 1272. It's in between the 1382 and the 1414. Okay, so and there's a 1618 way up there at 49.47, which would be the larger wave B top too. But it may have topped on the 27th. We'll have to watch that again. The short term with the 1 to 10 minute charts, which we put out to our monthly subscribers there. Okay, I don't know if we need to get into any more of that. Here is the ES, the E-mini futures. Same chart. You can see there's the all-time high, and the futures went above it. Okay, but there is the A wave down. Let me get this in perspective. There is the B wave up, and there is that upside trigger, the last one we saw. Let me line that up a little bit better for you guys. Okay, there we go. That's been a, what is it, 650 plus point gain. Not a bad move. We've got a couple open gaps in the future, which is rare. There's one back on December 7th and one way back here at the beginning of the move where it started up, and that was our trigger point for the upside. We're looking for a downside trigger now. That should be the next. We'll see. We'll get into that shortly, as I've been promising. But that's the bigger picture there of the E-mini futures. Okay, and that was a daily chart. When I get into the hourly, here we have a virtual double top on the 27th and the 28th. I think it was within a point or half a point. But you can see we've got a 1 down, a 2 up. This 3 here, and this is live. You can see it's 11:06 a.m. Eastern. This 3 here is more than a 2.618. We've got a 4 that held just at the wave 1 low, and then we've got a 5 down. Okay, and this was when I printed this morning pre-market. It's made lower lows since then, but I wanted to make a point here. I think I might be able to make it better with this chart. Here we go, the 10-minute. 3 is let me put it here. Okay, here it is. 3 is a 2.618, or more than a 2.618. You can see 2.618 is here. It's almost a 3.618. And if we put this of wave 1 and we put this at the wave 4 high, you can see that wave 5 is a 3.618. So 3 is a 2.618 multiple, 5 is a 3.618 multiple. The market is fractals of each other. So what you see in a 1 and a 10-minute chart, you'll see in an hourly, a daily, a weekly as it extrapolates out. That's why we always look for a change of trend in the 1-minute chart. So we see it in the 1 minute, like here on a 1 down, we'll see it larger. This has more ways to play out other than this initial 5-wave decline, and it still may be extrapolating or extending further to the downside. We'll have to watch that play out. But what you see here, you'll see on an hourly and a daily. Say for instance 3 is a 2.618 on the 10-minute and 5 is a 3.618 on a 10-minute. it should be the same on an hourly and a daily, meaning you'll see bigger and bigger declines. Instead of wave 1, then 3 is a 1.618, and then 5 equals 1. You'll see a 2.618 and 3, followed by a 3.618 and 5, if this is indeed a change in trend. That's the hourly chart. Let's look at the 10-minute. Again, this was made earlier this morning, so these have been lowered or moved, if you will. This is a 1 and a 2 and a 3 and a 4. Again, it stayed just at the wave 1 low, and a 5, or this could be a series of 1s and 2s. Let me show you guys what I mean by that. I'll put a 1 here and make it a different excuse me, color. Okay, we'll put that there. It could be a 1 and a 2, and let me clone that, put it up here and change it to a 2. There we go. It could be a 1 2 and a 1 2, and then a 1 2 3 4 5. So again, it's way early in the pattern. All right, this is not that old, but so far so good. We're going to wait for all of our indicators. See, that was that lower low, and it's an even lower low now. It's hard to believe that that is the entire retracement up. It didn't even reach the 382, but it's possible, especially if this is changing trend into wave C or 3 down. Okay, so that's it on the 10-minute. Again, we'll have different parameters if this low is down there. There you go. If you guys can't see those, that's 47.99 for the 382, 48.0750 for the 50%, 48.1550 for the 618, 48.27 even for the 786. Where is this wrong? Right there, 48.41. A move, 41.50. A move above 48.4150 means this count is wrong and invalidated. Okay, let's eliminate that noise and get on to, yeah, we don't need that. Let's get on to our reports that we put out this morning. I'll do the market open report. I think that is the same there as we just did. Yeah, the initial 5 waves down. I want to show you guys in detail what we need to see to signal a change in trend. All these 3 parameters are just the first part. There's more, but we need to see 5 waves down. Then we need to see 3 waves up to a lower high. That's in progress. If this is 5 down, there's 3 up, and you saw that 5 made a lower low. 3 waves up for a lower high, and then 5 waves down to a lower low. And those 3 make up the first part. Then we need more. So we're watching that on a 1 and 10-minute chart, as we always do. And there's all of our triggers and targets again. So we'll see how this plays out. Pretty amazing start to the new year, if you will. Okay, we'll leave this right there with the E-minis. Oh, and I wanted to measure this too. Let me see what this was from that. Let's find 41.85. I think it was about, that's within 50 points, a 15% move up. Yeah, a little more than 15, almost 16% up. That was not a bad move in a short period of time. About 2 months, almost exactly. So we'll see where we go from here. But we're watching that 1 minute and that 10-minute to see what happens. And if this is 5 down, then we'll get a 3 up, and then we'll get another 5 down to a lower low to give us our first signal of a change in trend. Like we've been saying for a couple months now, the last signal was up, and unless and until we see our first signal of a change in trend to the down, it remains up until that thing is broken. We'll see how this plays out. Okay, guys, and until next time, take care, everyone.